Welcome to Looking at the Markets with David Modell. I want to talk about stochastics, the K, and the D. What does that even mean? It's not that complicated. It's pretty simple. This will be a quick video for you. I'm on stockcharts.com. I want to give them credit. And I've got the daily candlestick chart. And I'm going to talk about swing trading today, but you can apply this to day trading as well. Just use a shorter time frame, for example, the 1 minute candlesticks or the 2 minute or 5 minute or whatever you like. All right, but we'll just use the daily candlestick chart for Intel here. As you can see, Intel has not been doing too well over the last few months. It's on a downtrend with lower highs, lower lows, and yet you still could have profited over and over by using the stochastic crossover here, crossover between the K line and the D line. Well, what does that mean? Well, the K line, that's the black line here, at least on stockcharts.com, and the D line is the red line there, okay? And so the K line, the black line, that's the stochastic line, and there's a formula for that, but we don't need to get into all of that. What you need to know is that the K line moves faster, as you can see, and the D line, the red line, moves slower, which makes sense that it moves slower because it's a 3-period simple moving average of the K line. Yeah, the red line is the 3-day SMA, simple moving average, of the black line. That's all it is. That's why you have the 3 there. Okay, it's a 3-day simple moving average of the K line, and the K line has a 14-day or 14-period look back period there. All right, but you can change that number, and you can change this number as well. You can change the D line, the look back period for the moving average of the K line. Okay. But I put it on the standard settings, 14 and 3, and that can be found on stockcharts.com. You just go down to indicators and you put on slow stochastics. There's also a fast stochastics. We'll talk about that momentarily. But the standard settings, the default settings, are 14 for the look back period for the K, and then the 3-period look back period for the D. All right. So let's go back to the chart here and the stochastic indicator and how to use the K and the D, the black and the red here. Well, a lot of people use the crossover. So it's your typical thing where when the faster moving line is below and then clearly breaks above the slower moving line, that's bullish. And then when the faster moving line clearly breaks below the slower moving line, that's a possible bearish situation, okay? So in other words, when the black line is below and then clearly crosses above the red line, when the K is below and then clearly breaks above the D line, that could be a buy signal, could be a bullish signal. And then when it crosses back below, when the K crosses back below the D line, that could be a time to sell because now the trend is turning bearish according to the crossover theory for the stochastic lines here, the K and the D. Now, some people also say that if you want confirmation, don't buy until until the K crosses is below and then clearly breaks above the D line, but also wait until it also crosses above the midline, the 50 line here. Okay, this is the 50 line where 20 is supposed to be, under 20 is supposed to be oversold, over 80 is supposed to be overbought, 50 is somewhere in between, but some people want confirmation, and so they wait for the K to clearly break above the D after it's been below it, and wait until the K crosses above the 50, the midline there, and then you can get into it. The problem with that is that by the time it crosses above the 50, you can see that most of the up move has already taken place, and it's a little bit exhausted sometimes. So I don't know if I would recommend that, but some people do. All right. But if you had bought when the faster line clearly crossed above the slower line, the K above the D, right about there, you would have gotten in here and you could have enjoyed a nice little ride up, even in an overall downtrend. Not that I recommend buying when the overall long-term trend is down. I'm not saying that you should do that, but even in the worst of circumstances, you could have still profited here. You could have gotten in here and then sold here. Okay, so you would have enjoyed a little run up from here to about here. Okay, and then again, okay, you would have enjoyed a little run up here and then here, and you would have gotten in here, sold there. So there's another run up here. You would have gotten involved in a lot of these small little run ups there. Not too bad. Another one here. You would have gotten in right about there, right after this big red candle, and then you wouldn't have sold until about, let's say, here. So you would have enjoyed a run up from here to here. You actually would have done all right, even in this stock that's going down overall, and that's pretty good. You could have done even better, I imagine, if the stock had been on a general uptrend, because then these run-ups would have probably lasted longer. All right, so there you go. That's the K line, the D line, and a possible strategy with possible confirmation as well if you want to wait until it crosses also above the midline, the 50 line, although once again, by the time that happens, most of the run-up may have already occurred. So be careful with all these strategies. Make your own decision. Don't do something because anybody else is doing it. Do it because you want to do it. If you like this video, please give it a thumbs up on YouTube and leave a comment. Do you like this strategy? Do you believe in it? Have you used it? Or do you like some other strategy better? Tell us about it, please. We're here to share ideas. And hey, if you haven't subscribed yet, please do that. Go ahead and hit that and the notification bell on YouTube so you can receive the latest updates whenever I put out more videos like this. And I also coach people, so you can email me anytime if you want more help. My email address is davidmodell@gmail.com. Thanks a lot. I really appreciate it. I'll talk to you again soon.